Well, hello everyone. Welcome to Long Verticals and Diagonals. I have the privilege of filling in for Mr. Ben Watson once again today, and I'm delighted to do so. So today I like to think that I'm covering the long and the short of it because we're talking about long verticals this morning, and then at 2 o'clock Eastern, I'll be talking about short verticals. So consider this your invitation to join us for that class as well. So what are we going to look at today? Well, yesterday was kind of an interesting day in the market. So we're going to look at what that did to our current example trades. And then I thought we'd look at both some bullish opportunities and some bearish opportunities and how we might take advantage of that. So we always start by going out and having a quick peek at what's going on in the markets. So we will do that, do a quick market overview. We're going to do a little bit of current portfolio review, so to speak, and then we're going to spend the rest of the time placing new trades. And if you want to follow up on those trades with us, I will be covering those in the Trading a Smaller Account class that I host on Mondays and Fridays. This will be the last time this particular class is taught this year. So next Thursday will be Boxing Day, or the day after Christmas. We will be dark. And there will be no live webcast between Christmas and New Year's. And so we will come back and this will be part of the curriculum again in the new year. So last class of the year, and I have the privilege of teaching it. Okay, so if you are not following us in the land of X, I encourage you to do so. Ben's handle at Ben Watson CS, my handle at Barb Armstrong CS. And we have the privilege of having Mike Fairborn with us in the chat. So if you guys are with me live and have any questions, don't hesitate to ask. And Mike posts some great content also at Mike Fairborn CS. So it's another free resource. I'm posting charts and other content there on a daily basis that I think you'll find helpful and informative. Sometimes I post pictures of the fam. So be there, be square. Okay, so that's that. Know that options carry a high level of risk and aren't suitable for all investors. With Schwab, you have to apply for option trading privileges and not all will qualify. So there's that. We use the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to learn. It's where I learned how to trade. And it's a great way to not only understand and get familiar with the mechanics of the platform, but also to make sure that you understand your trading strategy and that you've traded it enough times that you feel very comfortable with it. You have a trading plan, you know when to get in and when to get out, both if the trade goes for you or against you, and all of that great stuff. Now, there are some nuances and differences. One of them is that in Paper Money, a short option will never be assigned early. We'll talk about what that means in the land of long verticals. But in a live account, that can happen. And have I seen it happen? Yes. Have I seen it happen with a long vertical? Yes. And that's not necessarily a bad thing, but we'll go into a little more detail. And for those of you who are kind of seasoned veterans, you know that. I want to welcome those of you who help bring this class to life by being here live. So hello to Leo and High Speed Low Drag. Like, some of your handles are fantastic. And Paul and Will and Wiley and Randy and David and Life in the Fast Lane and Krishna. Truth will always prevail. Like, come on, guys. Like, these are fantastic, don't you think? And Mike and Sharon. Thanks to everybody for being here. Okay, so without further ado, let's bring up our platform, our Thinkorswim platform, which is looking pretty in pink today. And yesterday, like, I don't know why the market got its knickers in a twist. It befuddled me because, we had the Fed announce a 25 basis point or 0.25% rate cut. It's what everybody was expecting. And yet the market, like, sold off to beat the band. But when we look at the S&P 500, it's still up 23% year to date, which is extraordinary. It had this huge red candle yesterday, but it came back down to, this old resistance level, right? Oops, sorry. When I post on Twitter, so you can tell I posted some kind of chart, right? That has a double bottom pattern with a breakout and a retest. I think that was 5, and we're going to look at 5 today. So anyway, we had this, ceiling that became a floor, and it came back down to this floor or support level again. Now, if you are new to the world of technical analysis, starting in January, I'm going to be teaching the Getting Started with Technical Analysis and kind of putting a new face on that. So I'm excited about that. Yeah, Cameron May and I are trading places, and he'll be taking over Getting Started with Options. So if you want to see the new lineup, you can go to schwab.com/coaching. We've got 5 new classes coming. But what we see here today, coming back to our what's going on in the markets, this candle pattern here is considered to be a harami. Now, today's candle is still live, so it can change. But when the body of today's candle is inside the body of yesterday's candle at a support level, that's considered to be bullish. And we're seeing lots of similar patterns throughout stocks listed on the NASDAQ and the S&P. And so let's come and, oops, I've got to close this out and look at the NASDAQ. And now you see, so 5 minutes ago, this might have been that same harami pattern. Right now, it's looking just a little low, but it's down by like 0.02%. It's down just a smidge. And, we're seeing, again, this index up 26% year to date. And it's come down to what? The 30-day moving average, which has been acting as a pretty strong support level since the beginning of September, hasn't it? So, and yesterday it came down, and it didn't even close below the 30-day moving average. It came down and kind of kissed it, gave it a peck on the cheek, and it's sitting right on top of it. And so, no need for Chicken Little to be coming out and running laps yet, right? Right. Okay. So that's that one. How about the Dow? Okay, so the Dow, is looking like the saddest sister of the trio in that it's like down like 10 days in a row? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 came all the way down to this 100-day moving average. Now, how can you tell it's a 100-day moving average? Well, I know because I created it. But if you come and look up here, you see this line in black, it says simple moving average 100. And then the red is the 30, the blue is the 10. You can tell just by looking at the top of the chart. And so it came down to this 100-day moving average, which, did have Chicken Little at least doing warm-ups, and, it broke past this support level here around the 432 mark, which was really concerning. But now today we have this harami pattern, and we have an inverted hammer at a support level or at a potential support level. So that might kind of breathe a little hope into the life of the bulls. Yeah. Yeah, BJ is asking Santa for a rally. Have you been good? Have you been trying? Have you been behaving? Somebody's asking about when is the technical analysis class? I'll have to look that up actually, but I think it may be at the same time on Tuesdays at 2:00 Eastern, but I'll have to go and look. Okay, so there's our Russell, and it's down again today. So this is the sorriest, of the lot, in that it's crossing below this 100, and it's still a live candle. So we'll see if it holds, because it has been holding as support over this last 6 months. Like if we go to year to date, and it's still up 9%, but it's given back like 7%. Let's see, it was up about 16, 17%. So from here to here, it's given back almost 10% of its gain this year. Like all I can say to that is, ouch. Yeah. Yep. Okay. And the VIX, Well, the VIX spiked. I mean, it's been below 15, for most of the last month, like since November 25th. It's been below 15. And so, all is calm, all is bright. And then yesterday, look at that. Like, holy smokes, Batman, that was a big day. But today we have, again, now this is another harami, but you'd say, oh, is this a harami at a resistance level? And so, this means that, perhaps volatility will continue to fall. Okay. Okay. So to answer a couple of questions that are in the chat. So one of the questions is, kind of how do I see this new schedule? So if I bring up a window and we go to schwab.com coaching, and I will put this in the show notes, and Mike will add this to the chat for those that are here live. But you're just going to schwab.com/coaching, and you're going to come to live webcasts. And when we do that and we scroll down and we come to January, and somebody asked specifically, when is the getting started with technical analysis? Well, I know I'm teaching it. So getting started with technical analysis is going to be at 2 p.m. on Tuesdays. I'm going to continue to teach trading a smaller account at high noon on Mondays and Fridays. And then I'm picking up 2 brand new classes, one called After Hours Trading. And this will be both for people that want to do short-term trades, but they have a JOB and they can't be looking at the markets when it's open. So let's say they're, after their kids go to bed, they're going to sit down at 9 o'clock in the evening and figure this stuff out. Okay. Or somebody that maybe, hasn't, wants to be a longer term investment. But once again, they're looking at things after the market's closed, and then trading price patterns, where we're going to look at both longer term opportunities and shorter term opportunities. Yeah. So, and in both of these, in all of these, we're looking at both stocks and options. Okay. And then this class, like if you just want to see the whole schedule, or if you say like, hey, what's Mike teaching? So long verticals and diagonals will continue to be at 11. It's now going to be taught by Cameron May. Yeah, and somebody's saying, I don't have a job. This is my job. And I love that you think of it that way, because if you want this to pay you like a business, you have to treat it like a business. And if you have never listened to my webcast, I'll put a link into it in the show notes. And if, let me just, here, I'll do this for Mike, for you guys. Here you go. That's the Schwab coaching. But if you go to subscribe to the channel, and if you haven't done that, like, what are you waiting for? You just want to, you're on this webcast, so you can, or if you're watching it, you can just hit the subscribe button in the bottom right. But when you get there, I made the 12th week of my 12-week rotation and getting started with options, the 7 things that I wish I had known about trading in general and trading options specifically. And if you have never listened to it, I would highly recommend it, that you listen to that. 7 things I wish I'd known about trading options. And, it's about knowing what you want from your trading. It's about setting a goal. So I'll put a link to that in the chat, and I'll put a link to it in the show notes also. Okay. But it's just about having a goal, treating it like a business, tracking your results, all of this kind of stuff. Okay. Yeah. And I take this stuff seriously. A good thing, because I'm trying to teach you what, I know about this stuff, right? Okay, so let's come and look at our first opportunity. I want to look at, where will we start? Let's start with Kroger. Now, why might we start with a stock like Kroger? Well, this is kind of interesting because one, if we look at the sectors over the last 3 months, who's been leading the pack? Well, consumer discretionary, communication services, and technology. That's not a big surprise. And then industrials, like, where is Staples? Well, it's in the middle of the pack. But if we come and we look at the last 4 weeks, look at this. Staples is up into fourth place. So it's kind of, rotating into favor. And if we look at Staples, now it's pulled back a little bit in the last couple of weeks, but it hit a new high back here in September and then came, within a hair's breadth of it by the end of November. So, today it's looking a little lower, but, we look at technology, it's close to its all-time highs. Let me just go to a shorter time frame. It fell like the rest of the market yesterday, and then we have this Harami pattern. Communication services, are you seeing a trend here? With hit a new intraday high earlier this week, and Harami pattern today. Consumer discretionary hit a new all-time high yesterday before it got its knickers in a twist, and then Harami pattern today. So, a lot of the stocks that we'll end up looking at are in this kind of the top half of the pack. All right. Okay, so let's start with Kroger. So Kroger, there's been a lot of press on Kroger because they were working on a potential merger or acquisition with Albertsons, and that is now no more. Now, Albertsons stock has not reacted favorably, and Kroger's has. And when we look at it today, it's up 34% year to date. Given that the merger is no longer going through, or the acquisition, Kroger's announced a stock buyback of $7.5 billion recently. And I just came here and looked at the live news. So, here, December 12th, Kroger's $7.5 billion buyback. Eyes lower grocery prices and bigger returns. BMO raised their target to 63 from 60. Wells Fargo to 73 from 70. UBS raised their price target to 66. So it's interesting. Evercore raised their price target to 72. But so there's a range of price targets, but this stock is sitting at 61. We have currently, it's trading above the high of the low day, or that hold pattern type thing that we like to look for. And we've seen this series of, and it's not the tidiest, chart on the planet, but from a technician's perspective, they might look at this and say, well, if I'm playing I Spy with my little eye, this looks a lot like a bull flag to me with a hold pattern. And so if I'm looking at a long vertical opportunity, where might I want to put my strikes? Well, maybe 60 and 62.50, or maybe 60 and 65. But 65 is a long way to go. Like, this high is 63, so that would be up around here. That's a big move for a $60 stock. So how about maybe 60, 62.50? Let's see if that's an option, or maybe 60 and 62. So let's go see what choices we have. All right. So if we come out to the monthlies, we have to do a $5 wide spread. Now, we just looked at that on the chart and we said, that's kind of a lot. We don't really want to have to go that high. And for us to have our max gain, it would have to go through both strikes. So if we go to the weeklies, and this has an expiration January 10th, so 22 days out, if we go to the 60 and say the 62, so it's still got to go up 60 cents, but how much does this move in an average day? Well, this is our average true range. In an average day from top to bottom over the last 14 days, this stock moves about $1.40. So it could do that in a day. Okay. So here we go. So let's come and look at, can we get enough 60, 62, $1.14? So it's going to cost us $1.14. How much could we lose? $114. How much could we make? 86. Well, if we go to our example trading plan, and we created an example trading plan for our long verticals, our goal is to make a 50% return. And so if we said, okay, well, how much of a return would that be then? Well, I'm glad you asked. Excuse me. So something went down the wrong way. Okay. So if I take my $1.14 and I multiply that times 1.5 because I want a 50% return. I'd want to exit when it's worth $1.71. And you might say, well, aren't you leaving $29 a contract on the table? Yes, I am. Because the only way to get that entire potential return, that, 86 cents, is really to wait until almost expiration. You've got to be in it for the long haul, where we've placed a lot of these trades and, we could have hit our target in a week. We could also have hit our exit in a week. And what might our exit be? Our exit is if we're down 50%. Now, in our trading a smaller account, we're saying, okay, if we're willing to go up to $500. So, that's 4 contracts. And then we're going to go to single order, first trigger sequence, create an opposite order, and say, hey, when we get to $1, let's call it $1.70, we're going to close out the trade. So we want to buy 4 verticals. We're going to pay $1.13 to get in. We want to exit when we're at $1.70. We're risking $452. Are we okay with that? We are. So we're going to come to our long call vertical, fire in the hole. And you always want to read this. Like if there's something in red, it's like, hey, do you know this is a non-standard? This is a weekly option? Yeah, we know. Now, you might be saying, okay, now where is this trading plan of which you speak? And if we go back, to that Trader Talks. And of course, when you first bring up the Trader Talks, it'll show you what's currently playing. But when you come to playlists, I've created these trade management mini sessions. And when we're dark, so if you want to keep checking here, I'm going to record 4 or 5 more. I have a short list. And one of them is the buy right trading plan. But here's our example trading plan for long call verticals. And then we have one for long put verticals as well. And our plan says we're going to exit, and we put in a target to exit at 50%. And then we also have a plan to exit if the trade gets to a point where it's down 50%. But we don't put in stop loss orders. And the reason for that is that sometimes an event happens like yesterday, where there's a lot of volatility, and you might end up hearing like a lot of like ping, 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 ping. And it's not like after the election when we got out of 14 bullish trades, within 1 or 2 days, because they were all hitting targets. It could have been ping, 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 things hitting exits. And then today, the market has settled down. Although yesterday was painful, this account was probably down about $3,000. And so here we're now down $1,000 on our long call vertical positions, but we were down when the market opened. We were down 1,700 and something. We've gained, we've cut that loss from 1,700, to 1,000. And so the only one of these that is in the green at the moment is Apple, and all the others are down. But when we look at them, American Express is down 60%. And so do we exit? Well, let's go look at it, because today it's recovering, and today, you know, uh, MasterCard and many of these others are recovering. So because of the extraordinary day we had yesterday, we might say, hey, we're going to give some of these a day or two to just recover from this market. Some might look at it as an overreaction. I'm not saying it was an overreaction. I'm just saying that's how some people might choose to describe it. So, and we saw American Express. Here's our top strike. And yesterday it looked like the rest of the market and it pulled back dramatically. And then today we have this bullish Harami pattern. And is it a guarantee it will follow through? No. But, we have until December 27th. We still have another 2 weeks for it to kind of percolate and do its thing. Okay. So we will look at these again tomorrow. So let's look at Affirm. Today seems to be sponsored by the letter A. So do we see something similar with Affirm? So year to date, the stock is up 31%. I'm a skier, so I buy an Icon Pass, and I'm familiar with this company because for no extra charge, when I buy my $1,000 Icon Pass, Affirm will let me break it into 7 payments, and they don't charge me anything for it. It's a deal that they have with Icon. And so this isn't a recommendation of their services, but I became aware of this company because of that. And if we come to the Analyze tab in Fundamentals, if you're not familiar with them, you can come and say, oh, this is a financial company, and they have a payment network in the US and Canada and nationally, et cetera, et cetera. And so you can, it's a fairly young company. So you see, like with this 5-year trend, they've only got 3 years of information here. But do we see this same type of Harami pattern? We do. And so if we're bullish on this, and this thing has moved pretty dramatically since the last earnings announcement, right? Like it's up 70%. Like even from where it is today, after that big pullback yesterday, it's still up 50%. So if we were bullish on this, could we look at this and say, well, it's trading at 64.54. And again, if you're not familiar with this company, and we do, do a lot of looking at the charts, but you might want to come and say, like, what are the analysts thinking here? Well, Jefferies has raised the price target to 82. Like 82 is up here above the previous high. Doochie Beg. I always laugh when I say this one. They raised their price target from 45 to 75. Like, holy smokes, Batman. Like, on a $300 stock, that's a pretty big move. $30. That's 10%. Like, this is enormous. So, when you kind of come through and look at this, like, what are the analysts thinking? Well, at least these ones seem to be pretty bullish. I haven't seen any that are lowering price targets. And so, that's another thing that you may want to look at. So somebody's asking, what is this indicator on the chart that's showing these little arrows? So if we look at this one yesterday on Affirm, it closed below the 30-day moving average. And I have turned on an indicator to say, give me a red arrow if it closes below the 30-day moving average. And then when it closes back above, you'll see a green arrow. So we have a green arrow now. It's now trading above. You see a green arrow here, and you can add that just by coming to your studies. And you notice I only have it on the 30-day moving average. So when you come to edit this, it says show breakout signals, and the default is no. So if I leave that as don't show breakout signals and apply, then when we come back here, there's no little arrows. But it just shows me So that's that. Yeah. Okay. So with Affirm, let's come to the trade tab. And if we come out to January, these are 250 wide. If we come out to the January 17th, and it just depends on how bullish we are. If we're super bullish, we might rather go for the January 10th. But if we say, okay, could we do, and we're already most of the way through, if we did the 60 and the 65, it only has to go up 34 cents to be through our top strike. So if I buy my vertical at 60 and 65, that's $5 wide, I'm paying $273, which is quite extraordinary because I could make up to $227. I'm risking $273. If I get out my little calculator and say, okay, 268, because at 250, it's a 1-to-1 risk reward ratio times 1.5. So at 402, I've got a 50% return. Well, that's not too bad. So, and it only has to go up 17 cents and then stay there. It's like, okay, well, that's a deal. So how many of these are we going to do? We're going to do 2 because that puts us at $540 worth of risk. Single order, first trigger sequence, right click. God, the price keeps going up as we look at it. Okay, so 270. We're going to make this 402. 402. Good till canceled. And then how often are we going to check these? Every day. Every day. Every other? No, every day. So this is, but how long does that take? You could have 10 trades. It could take you 30 seconds, or you could spend 3 or 4 minutes on it. If you're brand new, you might say 5. So here we are. How much are we risking? $536. Are we okay with that? We are. How much could we make? 464. Are we going to wait and get the whole bit? No. We're willing to leave 200 of that on the table. Say if we can make 264, that's a base hit. That's a double. We're happy with that. Remember, like we started this account and it's been a long time since we've been under 40,000. Yesterday really hit us hard. But we've doubled this account size basically since last November. We started it and at our next class, our first class in January, we'll reset these accounts. Okay, so, but, and is this a typical return for a year? No, best year this account has ever had. But, and how did we do it? Did we have a lot of like home runs? A lot of base hits, 1 or 2 grand slams, but mostly base hits because we're trying to trade in a conservative way where the probabilities are in our favor. And, what do I mean by that? Well, if we look at this, we have a 45% probability of this being in the money on January 10th. We have got a 97.7% probability. Like those are pretty high odds that it will at least go to 65 and kiss it sometime between now and January 10th. And if it goes up through it, then, Bob's your uncle. We'll hit our target and we'll be out and, before we even get to the 10th. And so those probabilities are working for us, right? And somebody said, somebody asked this question, so I want to address it here. So our strikes are at 60 and 65. So let's take this strike is at 65. So I'm going to edit this and we're going to call this our long call vertical. This is our short strike. Okay. And then we're going to draw another line. Oh. And we're going to make this at 55. And this is going to be our long call vertical. This is our long strike. Now, if you buy a call, what does it mean? It gives you the right to buy the stock at the strike at any time between now and the expiration date, which is January 10th. Well, let's say a firm takes off. So let's say it goes up, okay? And it doesn't have to go up very far to be above our strike, you know, because we're only 37 cents away from it. So let's say it goes up and we get called out. And when we sell a call, what are we doing? We're saying, hey, if you would like me to buy, if you would like to buy from me 100 shares of a firm at, you know, $65, because that's where our strike is, I'm happy to sell it to you for $65. And then you're going like, why would I commit to that? I don't even own the stock. And now it's up here and it's trading at $75. Whoops, $75. And I have made a commitment to sell it at 65. And I don't own the stock. Does that mean I have to go out and buy it at sell it 75 and then sell it at 65? No, we have this right to buy shares at 55. And one of the questions in the chat was, well, what happens if I'm called out? What happens if my long strike is exercised? Well, crack open the champagne, start doing the happy dance, put on your favorite song, because what's happened, what you'll do is you'll go in and exercise this strike and you'll buy the stock at 55. So you have the stock to sell at 65. And now we were saying, we aren't even aiming for our max gain. We were willing to leave $200 on the table. Well, guess what? If you're called out, you just got your max gain. I can type, honest, I can. You just got your max gain. So you are one pretty happy camper. You know, of course, this is all paper money. So you can go and buy a paper money bottle of champagne and have a paper money party with it. But so being called out isn't always a bad thing. You know, it can be a good thing. And this is kind of one of those, well, oh, here's where it could be a good thing. You know, please call me out if this goes up. And, you know, and this is another thing that I misunderstood, because when I first started trading this, it's like, hey, it's above both strikes. Shouldn't I have my max gain? Yeah. Hold on, grasshopper. Yeah. You know, because you have these two kind of competing strikes. And this is a way that we're buying the strike. And sometimes this is the only way we can place this bullish trade. Now, in this case, this is a $64 stock. So maybe we could afford to just buy the option. But if we're looking at a Tesla, for example, and let's go look at Tesla just to kind of illustrate the point, you know, we have a small account and Tesla's, you know, and again, you know, this is a $440 stock. So what do we have here? We've got this big, you know, bull flag setting up. And this was green a minute ago. It's kind of going back and forth. So we may look at this again tomorrow. And if we wanted to place a trade on this, you know, what's the challenge? Well, the challenge is it's out of our snack bracket. You know, and what do I mean by that? Well, if we were to buy an at the money call, you know, $35. So that's $3,500. What's our max risk? 500. How much could we lose if we buy a call? We could lose all of it. So is that within our range of trading capability? Not even close. But if we look at this and say like, hey, could we do the 435? So could I buy this one at 37.50? And then by selling one above it, I still get to participate and profit from a potentially bearish move on Tesla, but I'm not risking blowing up my account. And even with all our rules in place, I think we were down over $3,000 yesterday. That's well, that's 15% of our original account value. It's about, not quite 10% of our account value, but yesterday was, our account is decidedly bullish. So here I went from a $1,300 a $3,500 risk or a $3,700 risk to a $235 risk. Well, that's way more interesting, isn't it? That's something that even with a small account, we can take advantage of. And so I wanted to look at one bearish opportunity also because, a lot of stocks pulled back yesterday that were quite bullish, but there are some who've kind of been rolling down the hill for a while. And here's Uber, which is barely breaking even, down 1%. But since it hit this high back in October, it's been struggling. And here's what we call a bear flag, where we have something that has been falling. Let me erase. So it's been falling and then it's come up. And today we have this, a bearish engulfing pattern where today's body is engulfing yesterday's body. And so could we say, Uber looks like that might continue to fall. You may want to go and read the news on it again, but it's at 60.86. Could we come over to this put side and come out here and say, could we do the 62.50, which is the first strike in the money? And again, if you look at the example trading plan, do we have at least 20 times the number of contracts? Well, we have 29,000 contracts. So I think we're good there. Do we have a tight bid-ask spread? Yes. Does it trade more than 1 million shares a day? Check, check, check. So could we buy the 62.50 and then sell the 60? And it's kind of the same thing, only we're going to flip it and reverse it. We're expecting this to go down below 60. How far does it have to move? 82 cents. If you want to know your break even, our break even is at 61.17. It's like, I thought this was a bearish trade. It is a bearish trade. But because of where our strikes are, it could even go up a little and we still might be okay. And so again, how much could we lose? All of it. So how many contracts are we going to do? We're going to do 4. That puts us in that range of 500. And again, what are we looking to make? About a 50% return. So, our $1.32, we're going to add, I don't know, about 55 cents. So $1.32 times 1.5, $1.98. Are we leaving money on the table? Happily. Don't be greedy. And if this gets up to the point where we're up 35% or, 40%, and it looks like it might be bouncing, can we exit? Absolutely. Say, you know what? Better to take a little than risk giving it all back. We hate that. Snatching defeat from the jaws of victory. Yeah. Confirm and send. How much are we risking? $528. Are we okay with that? Yep. How much can we make? 472. Do we want to get all of it? Nope. Just want a piece of it. Just want a little bit. Don't be a greedy guts, right? So this one is a bearish trade. And, and even though the market has been hitting all-time highs, and all the indexes have been uptrending, has this one been participating in that? Yeah, no, look at that. It's down. And tomorrow, perhaps we'll talk about, what that means. But again, if we were, the short put was exercised, would that be a bad thing? No. We would then exercise the long side and we'd have our max gain, which means we'd make more than we were anticipating. And that's a great thing. So guys, my time is up. There is a survey in the chat. And so here's what I ask you on the survey. If you'll take the time to fill it out, it's 2 questions. 1, I hated it. 10, I loved it and I'm becoming a regular. And then everything in between. And then you have the ability to put in comments. So let me know what you liked, what you'd like to see more of or less of. I'll pass that on to the next instructor for this class. And of course, I teach long verticals all the time within trading a smaller account. So I'll incorporate that in my trading a smaller account class as well. So if you do the survey, that'd be great. If you'd hit the like button, it helps move this up in the YouTube algorithm so more people can find this content. Would appreciate you hitting the like button as well. Follow us in the land of Twitter, subscribe to the channel, get out there and have a really awesome day, everyone. Thanks to Mike for all his help in the chat and to the guys behind the scenes for bringing this class to life. I'll see you all at 2 o'clock for short verticals. Take care, everyone. Bye for now.